Hello and welcome back to Stock Market Weekly for Friday, May 31st, 2024. I am your host, Evan Medeiros, and we are going to move through things quickly today. It's summertime trading. We're going to be talking about the lightest volume trading week of the year, but it's a little bit of a cheat because it was only 4 days worth of trading. We're going to talk about Friday's intraday turnaround. That was pretty spectacular to see, quite the V-shaped sell-off and then recovery. We're going to talk about PCE sending yields lower. We're going to look at the Mag 7 stocks, and we're going to look at energy sector as it starts to perform on a relative basis. So let's dive right into it here. TC2000, that's the charting platform we use throughout these videos. It's a charting platform that we support here at the Trade Risk. So if you are a user or if you're considering being a user to their platform, check out our website. We've got lots of guides, tutorials, free downloads, all kinds of cool stuff. And you can work with me if you need some custom adaptation to the platform, if you will. So let's get into it here and take a look at the 1 week return. You can see here on the right hand column, it was basically a negative week across the board. The Russell 2000 just crossed the finish line here on Friday, literally, with seconds to spare to move back up into positive territory for the week, but generally speaking, pretty firmly negative. It was kind of this, again, we're getting a lot more mixture out there in terms of the stocks and sectors that are working and those that are not working. We talked about this last week where we essentially had a very narrow leadership market, aka Nvidia, and then a couple of its culprits that follow in that AI trade, and everything else was down. The majority of stocks were down last week, and we talked about that, and we kind of see similar behavior, but just again splitting the difference here depending on what sectors you're in. You can see that the volatility across the board was up this week by about a point. I mean, we're still at pretty subdued levels here. The VIX down basically around 13, briefly above 15 this week, I think even to start the session on Friday, but still pretty low, all things considered. Now, let's move over to our sector breakdown here. Again, you can see most things were in the green this week in terms of sectors. Energy was the top standout, like we mentioned at the top of the show, followed by real estate and utilities. We did get that sharp reversal in yields following that CPE data, the April PCE data. And so that kind of sent yields moving back down and kind of put on that rates trade a little bit. What wasn't working this week, though, is technology, industrials, and healthcare. Those were the three sectors that were in the red. They were underperforming, and they're sort of the heavyweight, kind of that market cap weighted big stuff was really the things that were getting a little bit more or a little more under pressure this week. If we take a look here at our smart trend filters, the custom indicator for TC2000, it's also available for Trading View. You can see that we're getting, again, a little bit of changing of the guard here. You're seeing a lot more yellow dots printed. Yellow dot just basically means, hey, you know, take a closer look. There's a little bit of uncertainty. There's evidence on both sides here, bullish and bearish, and you're seeing just a lot more yellow dots printed across the board. And so that gives us a little bit of pause to take notice. Now, talking about market breadth, we do continue to see a bit more narrowing of stocks and their 52-week highs and 52-week lows ratio here. If we zoom in, you can see that we are starting to dry up a bit here on the number of stocks that are hitting 52-week highs. Meanwhile, the 52-week lows list is starting to, you know, just about inch back up. Right now, we don't want to be hitting the eject button, running for the hills immediately just because we get a few days of thin sort of ratio or narrowing of stocks hitting 52-week highs, but it should put us on alert. It should just, again, keep us aware of what's happening underneath the hood. We don't want to see a big flurry, a spike, a consistent reading of hundreds of stocks making 52-week lows suddenly. That would start to trip things up and derail the sort of bullish train that has been been breadth here over the past handful of months. So we're going to keep an eye on it. Notable flag, warning sign, yellow. Let's keep going here to IBD's list. They are a sponsor of the show. Thank you, Investors Business Daily, for helping make this show possible. This is their top 10 on their IBD 50 list. They update this list every day. You can get access with a link in the description of this video. You can see pretty mixed performance here on their top 10 stocks this week. Had some big winners like HIMS, and we had some losers like FIX and RXST. So check it out. Link in the description of this video. Get yourself access to their IBD digital subscription. That brings us over to commodities here. Not a whole lot to say this week. I mean, we definitely saw some nice outperformance here in DBA. Nice recovery continued. We also saw some stark kind of underperformance and give back here in natural gas, down 7%. It had a big rally going, kind of coming into this week. So it finally, gave a good chunk back this week. Everything else kind of, in the mild movement category. Now, Treasury yields, this was something that was really a concern here on midweek. They were starting to really ramp up and accelerate up. There was momentum building and essentially, bonds rolling over, Treasury yields rising. That was until Thursday's session. We got a bit of a reversal, and then we got Friday's kind of confirmation lower and really kind of just came back and swinging the mallet on the Treasury momentum trades head in terms of getting it back down. We still were up across the board, but a heck of a lot better here to close out the week than where we were midweek. So once again, the 10-year Treasury yield, you can see just by this, general slope here, this trend line that's been on here since the start of this year. It is kind of back testing, retesting, kind of rolling over. It's a bit messy right now as the market kind of figures out what the Fed's next move's going to be and when it might occur. And so right now, we ended up the week kind of glass, I guess, half empty, but still, something, again, we are watching closely. So let's get into the price action here. Let's take a look at a handful of different charts. We're going to start it off here with the S&P 500. You can see first off, daily chart. This is what we were talking about last week. We talked about this range right here, this new short-term range that the S&P 500 was carving out. And, we essentially said, look, when we come into this week, we do want to be kind of prepared or on our toes as to which way this market's going to lean, because we got this inside session essentially closing out last week. We talked about that all right here was last Friday's trading. Let's see if I can get this back in. Perfect. Okay, so this was last Friday's update. We had this big inside print. Prior day was a big bearish engulfing day for the S&P 500, no follow through. And so we were kind of bracing to see which way this market tipped. Well, it ended up tipping to the downside. We ended up selling off, breaking down, and probing lower. And if you take a look here at Friday's range, take a look at the tail on this day, and then just take a look at the reversal on this session. So Friday, we took really the elevator down to start the session right here. We took the elevator down and we took the elevator back up. Look at this last 15 minutes of the session. Now, this is classic kind of hallmark summer trading at its finest. I mean, you had month end, so there's definitely some flows action here, and month end occurring in a illiquid market environment gives you 15-minute candles that stretch 0.7% in the S&P 500. So this here is at its finest. Just again, be aware of the environment, the liquidity environment that you're dealing with throughout this time of year right now, and that was certainly on display on Friday's trading. So needless to say, large range. What ended up happening here was, again, a breakdown of this range, a retest or sort of an undercut of the breakout March highs. But ultimately, we did manage to hold it. We managed on a weekly basis to stay inside of last week's range and above the March highs here. So again, I think you got to give credit to the buyers and the bulls right now. They are putting up a good fight. Market is trying to, tried to sell off, tried to probe lower, but we ended up reversing and closing up, still down on the week, and we're not out of the woods yet. but it was certainly a good fight kind of taking place right now. So S&P 500, good recovery. Nasdaq 100. I mean, look at the tail here on this bar. This was a perfect kind of pin bar. We were down, I think, almost 2% intraday, and now you can see us closing right back where we started the day. So this is what we started talking about last week. You know, you may want to just kind of hit the beach or clock out early on these types of sessions, because quite frankly, you know, if you started the day here flat and you basically said, oh, there's nothing happening, you walked away, came back to the end of the session, you ended up flat, but boy, did you take quite the ride intraday, down 2% and then right back up. So Nasdaq 100, similar comments, came back, undercut the March-April breakout highs, did it on some heavy volume here on Friday, and managed to kind of close up. We're not out of the woods yet. Still looks like we're in kind of pullback mode here, but we'll need to see now how we follow things up on next Monday. And last but not least, the Russell 2000. This definitely looks a little bit different. You can see that the Russell 2000 started to really get its act together on Thursday. So again, if you just take a look at this chart, S&P 500 was kind of chugging lower coming into Friday. Same thing with the Nasdaq 100. And then if you look at the Russell 2000, it was kind of already on its way up, started to act a bit better, gave it that relative strength into the end of the session here. So bigger picture, don't really see a whole lot of change. It still looks like it's comfortably digesting in this 190 to 210 zone, but some nice relative strength to speak of. So that is the major markets. I want to talk real quick about the 10-year Treasury yield, like we already mentioned a few times, but this was the momentum that was picking up steam. This is a 10-year, this is TC2000's CBOE 10-year Treasury index. And you can see that particularly on Tuesday and Wednesday, we really started to pick up steam to the upside. And then we rolled over, you know, fairly sharply, aggressively, I would call it, on Thursday and Friday. So we're going to want to keep a close eye on this, basically IEF, the Treasury bond. And again, you can see kind of that V-shaped action that was occurring there. So let's keep a pulse on that. I also want to talk about energy today. Energy on the sector level here, XLE, nice consolidation, right? I think a lot of folks have just kind of forgotten about XLE and have really sort of left this trade. It's been in this, you know, pattern of lower highs and lower lows. It's been consolidating, but it's a nice, you know, bull flag that is really kind of formed here off of this impulse leg, right? Starting all the way from the start of this year, XLE had this nice advance. It was up about 25%. Since that point, it pulled back about 8%, and it's starting to really, you know, firm up here on Friday's session. So something to pay attention to. It's a little bit early, but on our bullish screeners, we saw just a lot of energy stocks on Friday hitting that list and really starting to make some breakouts. So keep an eye on it. XLE, I like the sector here generally. I think you got to comb through some names to find the more actionable ones, but there are certainly some stocks in there with some good looking technical setups. I want to finish off this video with the Mag 7 stocks. And you know, when I looked at these stocks earlier on Friday's session, when I say earlier, I mean an hour before the close, they certainly looked a heck of a lot more ominous and dangerous than they do at the close of today's session. And I do think it speaks to kind of going back to the market environment. There's lots of charts now based on Friday's trading that printed a hammer or some type of reversal bar like this. And so I think what's going to be interesting to see is if we look back 2 weeks from, you know, when we're in the middle of June and we point back to, you know, May 31st, that was the day the market, you know, put in its local bottom and everything started to rip. I mean, that's a possible path that the market can take here. We just saw some type of bottom, heavier volume came in on that reversal, and off we go. Now, we need to see more evidence, right? We need to see things back to the market conversation. We want to see, you know, market breadth pick up and sectors continue to perform. But when we look at these Mag 7 stocks, I think they're interesting because they play such a heavy role in the weighting of the indices. It's natural that we want to just pay attention to what these 7 stocks are doing. So Microsoft, you can see kind of rolling over and has been flat to neutral. It's stuck in a range. It's not uptrending. I mean, it's straight up moving sideways to down. And we want to see now if this can stick a landing here next week. Same thing with Meta. Meta here, remember, if you recall, had that earnings gap down. Buyers stepped locked in, but now it's going sideways, and it's you know, just kind of waiting here for its next directional move, but it is not in a fierce uptrend any longer. Google is half decent, right? I mean, Google certainly is in a higher low, higher highs pattern, and it's in a pullback mode right now, but this is more healthy than the formers. Amazon, again, pullback getting a little bit long in the tooth, pretty flat, neutral sideways trend. And then you have Tesla, which has kind of been in its own little universe here, very sideways, waiting to see which way this tips. The two bullish stocks, of course, is Nvidia, like we talked about. I don't think we need to comment too much more on this. It filled the gap today and, you know, is still in a very strong uptrend that is making directional progress. And Apple. I think Apple is interesting because Apple was the stock everyone was concerned about, including us, back here in April. All the Mag 7 stocks were working, and Apple was down here kind of testing its 165 support and just looked the weakest. And now it's the flip. Apple is the strongest after its May gap up, and it's trying to test these highs here. It's not at all-time highs, but it's not that far away, and it definitely has a lot more trend strength behind it. So you really have Apple and Nvidia, I would put in kind of the bullish category here for Mag 7 stocks. And then you've got, you know, kind of everything else here. You've got the other five, Google kind of in between, Tesla we're waiting for. And so I think that's, you know, gives us some more clues here as to which way the indices might tip by looking at some of the biggest weightings in those indices. So that's all I've got for today. I'm going to try and keep it short, tight, and as actionable as possible, but trying to just let the market do its thing here. We've got some levels we can pay attention to, but other than that, hopefully you're starting to enjoy the good weather out there. Thanks as always for tuning in every Friday. We do our long form analysis just like this. If you like it, do share it, subscribe, all that fun stuff. And we've got links in the description of this video for more content and resources. So thanks so much. Have a great weekend. We'll see you back here next Friday.